Buying your first home in 2025 isn't just a milestone. It's the biggest financial decision of your life. And the reality, if you don't prepare properly, you could waste tens of thousands of dollars. In the past 10 years, I've seen first-time buyers make every mistake in the book. But I've also helped smart buyers save big. And that's exactly what I'm giving you today. Here are 20 expert tips for first-time home buyers in 2025 that will help you avoid costly mistakes. Get the best deal possible. Set yourself up for long-term financial success. Stay with me until the very end because tip 20 is the one most people don't learn until it's too late, and it can literally save your home. Number 1, get pre-approved, not just pre-qualified. Pre-qualification is just a rough estimate. Pre-approval is the real deal. The bank actually reviews your documents and gives you a locked-in rate for 90 to 120 days. Without a pre-approval, you could waste weeks shopping for homes you'll never be able to buy. Number 2, know your true budget. Your mortgage is just the beginning. You've got property tax, home insurance, utilities, repairs, maintenance. A lot of people stretch to the max on their mortgage and forget these. Golden rule: keep your total housing costs under 30 to 35% of your gross income. That way, you can breathe when life throws curveballs. Tip number 3, don't drain all your savings for a down payment. Yes, bigger down payments lower your mortgage, but I've seen too many buyers wipe out their savings and then panic when the furnace breaks or property taxes jump. Keep at least 3 to 6 months of expenses in cash reserves. Being house rich and cash poor is a recipe for stress. Your home should be a blessing, not a burden. Tip number 4, understand mortgage types. Fixed, variable, adjustable. In Canada, you've got 3 main types. Fixed rate, predictable, same payment every month. Great for stability. Variable rate, tied to prime. Payments may change with interest rate. Adjustable rate, payments stay the same, but the split between principal and interest shifts. Pick the wrong mortgage type and it can cost you tens of thousands over your term. Tip number 5, know the difference. Mortgage default insurance versus home insurance. First-timers often confuse these. Default insurance, CMHC, Canada Guaranteed, SAGAN, protects the lender if you default, and is mandatory if your down payment is under 20%. Home insurance protects your property, belongings, and liability. Mortgage life insurance pay off your mortgage if you pass away, but is often overpriced compared to private life insurance. Confuse these and you might overpay for coverage you don't even need. Tip number 6, don't forget closing costs. Lawyer fees, land transfer tax, title insurance, home inspection, moving costs. Plan for 1.5 to 3% of your purchase price. Skipping this step leaves too many first-time buyers scrambling with credit cards on move-in day. Tip number 7, your credit score. This is your leverage. The higher your credit score, the lower your interest rate. Over 30 years, that difference can be tens of thousands of dollars. On a $500,000 mortgage, a 1% higher interest rate could cost you $70,000 more in interest over the term. Bad credit doesn't just cost you pride, it costs you money. Tip number 8, don't stretch for the maximum you are approved for. Just because the bank says you can afford $700,000 doesn't mean you should. Buy what fits your lifestyle, not what maxes out your approval. Owning your home should bring freedom, not chains. If you are getting value from these tips, hit the subscribe button right now. I'm putting out videos every week to make money mortgages simple, smart, and stress-free. Tip number 9, consider first-time buyer incentives. In Canada, you have got programs like the First-Time Home Buyers Incentive, RRSP, Home Buyers Plan, and Land Transfer Tax Rebate in some provinces. Don't leave free money on the table. Tip number 10, location, house features. You can change paint, kitchens, bathroom, but you can't change location. Choose based on school, commute, safety, and growth potential. A good location forgives a bad kitchen. A bad location ruins even the dream home. Tip number 11, get a home inspection. Yes, Even in competitive markets, a few $100s upfront could save you tens of thousands later on hidden repairs. Tip number 12, avoid big purchases before closing. No new cars, no big furniture splurges, no opening credit lines. Lenders recheck your finances before closing. And I've seen deals collapse because buyers couldn't resist a shopping spree. Tip number 13, understand amortization. A 25-year mortgage versus a 30-year mortgage changes your monthly payments and your total interest. Example, $500,000 mortgage at 5% for 25 years, that's $2,908 a month. At 30 years, $2,684 a month. That's $224 a month saved. But if you take that $224 and put it back into your mortgage as extra payments, you will knock years off your term and save thousands in interest. Sometimes the slower path actually gets you debt-free faster. Tip number 14, think about future life events. Marriage, kids, job changes. Make sure the home you buy has room for your life to grow into it, not out of it. 15, don't forget ongoing costs. Furnace replacement, roof repairs, renovations. A safe rule, budget 1 to 3% of your home's value per year for maintenance. 16, shop around for mortgages. Don't just go to your bank. Brokers can often find better rates, more flexible terms, and lenders you've never heard of but are fully regulated. The difference between a good rate and a bad rate is not hundreds, it's thousands. 17, think long-term resale value. You may not live there forever. Look for features that make resale easier. Layout, light, yard space, parking. Avoid emotional overbidding. Markets can be heated. Stick to your budget. Walking away from one house might be the smartest financial move. 19, build equity as soon as you can. Extra payments, lump sum payment, doubling up when possible, all go directly to your principal. Start small, but start early. And the last one, have an exit strategy. Life changes, jobs, family, health. Know ahead of time what your backup plan is. Renting out your place, selling, or refinancing. A smart homeowner doesn't just plan to buy, they plan for life after buying. There you have it. 20 expert tips for the first-time home buyers in 2025. If you follow even half of these, you will save thousands, avoid stress, and set yourself up for success. I'm Thuc, your money guy, making money simple, smart, and stress-free.